Welcome to Beautiful Minds. Week 34. The highest score this week was MCX at 288, but we did not buy it. We bought Gokul Agro and National Aluminium. That may strange if you look only at a leaderboard, but Beautiful Minds is not a leaderboard channel. This is a real money weekly investing documentary. The score creates the shortlist, then we check the valuation, technical confirmation, portfolio fit, and execution reality. Week 34 is the story of what happens after the algorithm speaks, including one source check we are not going to hide. Here is the question for the episode. What turns a ranked stock into an order? First, we screen a wide market universe. Second, the model ranks the candidates. Third, we filter for value, signal, sector balance, and existing holding. And only then do we execute and track the actual order. So the final purchase is not a one number decision, it is a sequence. And the important part is that every step can be explained after the fact. Before narrowing to the final picks, let's make this short concrete. MCX represents the exchange and product reference. Gokul Argo represents edible oil and a mid-cap growth and value case. Nelok represents aluminium and a different portfolio driver. The supplied website references helps us connect each trigger to an operating world. The important source rule remain the same. Model numbers are dated snapshot, execution numbers are tracker evidence, and any disagreement must be shown and reconciled before a final public claim. This is the week 34 ranked shortlist. MCX leads the model at 288 and becomes the watch list decision. Gokul Argo scored 273 and becomes the change pick. Nalok scores 254 and becomes the value pick. The ranking tells us what deserves the attention, but it does not tell us where to put the weekly capital by itself. That is the why the next slides move through valuation, technical confirmation, risk, and portfolio fit. MCX is not rejected, it is respected. The model gives it the highest combined score at 288 and the technical score is strong at 84 out of 100. But the valuation snapshot is demanding. PE is about 48.7 times and the workbook flags a very expensive peg reading. So the disciplined action this week is not to force an order simply because the score is number 1. It is to keep MCX on the watch list and wait for a better balance between business quality, price, and entry discipline. Strong score does not mean automatic purchase. Gokul Argo is the week 34 change pick. In the model snapshot, it scored 273 and received a strong buy rating with fundamentals and technicals aligned. The valuation looked more balanced at about 16.2 times PE. ROE was 46.5% and ROCE was 37%. The growth picture was also strong. 5-year sales growth was about 24%, 3-year sales growth about 31%, and 5-year profit growth about 53%. Technical analysis RTA showed a bullish super trend, a golden cross, and a price above 200-day moving average and VWP. But this is not a perfect company story. Margins were thin and the model flagged borrowing cost as a watch out. The decision was a balance of growth, value, confirmation, and portfolio need. National Aluminium is the value pick. Its model score was 254, but the technical analysis score was the strongest in our final part at 84 out of 100. The valuation snapshot showed PE around 10.6 times with ROE at 42.6% and ROCE at 40%. The quality screen showed 5 positive factors, 0 negative factors, and no red flag in the pros and cons analysis. Profit growth was strong over the 5 years and 3-year periods. The risk is different from Gokul. This is a cyclical aluminum business, so earnings and price can move with the metal cycle. That is the why we track the cycle and working capital signal rather than the treating a low multiple as a guarantee. This is the portfolio fit decision. Aegis Logistics and Eicher Motors may remain valid holding, but they were not urgent decision for new money this week. A good company can receive zero new capital. Week 34 instead adds bread through edible oil and aluminium. Gokul bring value and growth characteristics. Nalok brings values and a strong technical confirmation. The final choice is not best stock versus worst stock. It is the best next use of this week's capital, instead the portfolio we are actually building. Shot number 1 showed the model plan captured on 18th August. The tracker records the actual execution on 19th August. The planned allocation was approximately 9,951 rupees and 20 paisa. The tracker total is 10,138 rupees and 75 paisa. That is the difference of 187 rupees and 55 paisa. This is exactly why we separate model snapshot from execution records. A plan is not same thing as a fill. The video should show the execution record, not quietly present the old plan as though it were the final order. The source check is completely reconciled for both holdings. For National Aluminium, both the videos and tracker shows 11 shares at rupees 383, total rupees 4,213. For Gokul Agro, both the source confirm 25 shares at an average price of rupees 237 and 0.3 paisa, equaling an invested amount of rupees 5,925 and 75 paisa. Full alignment between execution proof and tracker records ensures complete transparency before publication. Shot number 2 is the proof layer. It shows the order flow, the placed screens and the visible execution metadata. The long video is the reasoning layer. It explains the scorecard, valuation, technical confirmation, portfolio fit, risk factor and the source reconciliation. Proof earns attention, process earns trust. The two videos should support each other without pretending to be the same piece of content. Now place week 34 inside the wider journey. The workbook dashboard snapshot shows total investment of approximately rupees 1,09,817, portfolio value of approximately 1,22,272, reported portfolio of rupees 12,455 and reported return or profit and loss percentage of 11.34%. The journey has 26 holdings and 11 weeks tracked. On these animated slides, the visuals reveals in sequence total invested, portfolio value, reported profit and loss, and then profit and loss percentage. This is context, not a promise, and it is a dashboard snapshot rather than a broker confirmed live value. The portfolio is feedback. It helps us learning whether our process is becoming more disciplined over the time. The Beautiful Minds formula is simple enough to repeat every week. First, what rises to the top of the scorecard? Second, what price are we paying? Third, is the technical picture confirming the entry? Fourth, does the portfolio needs this exposure now? The algorithm is not being ignored, it is being interpreted. A ranked list can attract attention, but a repeatable filter can build a long-term investing journey. That is the process we want to keep improving. Week 34 leaves us with 4 lessons. A high score can still be a watch list when valuation is demanding. A good holding can receive zero new capital when the portfolio does not need more exposure. The model plan and the actual execution are different records and should be labeled differently. And source integrity is the part of the investment process. If a video and tracker disagree, we reconcile before publishing. Next week, the rules says the same: screen widely, buy selectively, and track transparently. Week 34 is not a prediction, it is a record of a decision. Screen widely, buy selectively, and show the evidence honestly. This week's planned pair was Gokul Agro and National Aluminium. Across two sectors, inside a 10,000 rupees weekly investment journey, which stock would you have chosen and what would you have checked first? Share your reasoning in the comments. If you value a transparent long-term investing process, like the video and subscribe to Beautiful Minds. This content is for educational purpose only, not SEBI registered investment advice. Markets carry risk, fast performance does not guarantee future results, and you should do your own research or consult SEBI registered financial advisor.